investor friends, I'm Michelle Markey, and today I'm going to be talking about what's new and exciting at Netflix, including how they recently greenlit Squid Game Season 2 and how there's an upcoming biopic on Marilyn Monroe called Blonde featuring Ana de Armas, and also rebooting their entire business model, as I'm going to focus mostly on Netflix from an investor's perspective because, as you know, this is an investing and personal finance YouTube channel, so I definitely enjoyed talking about all the more intricate details about finance related to what Netflix is going through, because there's a lot happening to it in what would be considered a huge event where it's been losing subscribers since the beginning of this year, and they're trying to figure out what ways they can generate revenues after the last couple of years of people being stuck at home pulled forward a lot of revenues that now they're questioning what pace they will continue to grow at. And it caused Bill Ackman, after having bought it in the first quarter, to totally liquidate it in the second quarter at a $400 million loss. And so considering that, Netflix has been down about 77% at its recent 52-week low on May 12, and the last I checked when I'm recording this video, it traded at about $173 per share, or still down 75% from its all-time high of $701 that it reached on November 19, 2021. So from all of that, it's super exciting what could be going on, and today I'm reflecting on some articles that discussed what Netflix could possibly do to generate growth and revenues, including how they might be going after some people for password sharing, and they're doing experiments in Latin America, and also how they might eventually have an ad-supported tier. So across those and some more ideas, like also how they are being speculated that maybe they might do some kind of partnership or buy Roku and or maybe do something with Spotify. Those are all in the mix as to what some people are trying to gossip about. So I'll also share my thoughts on some of that. And if you also enjoy studying businesses to see if they might make good investments, I hope you'll like and subscribe to my video and YouTube channel, because that's what I'm all about, is to try to figure out what will be good investments for the long term and that hopefully we'll all get wealthy. So thanks. And what I find absolutely incredible is, after being such a winner over the last decade, that Netflix's stock price is taking a breathtaking plunge down to levels we haven't seen since exactly 5 years ago, when Netflix was trading in a similar range of between $160 to $190 per share. And so that means that people were willing to pay the same price back then for Netflix only generating revenues of $10 billion in 2017, whereas now, as of 2021 year end, they had generated revenues from streaming of almost $30 billion, and that compares to 2020, where they added $5 billion over that, where they generated almost $25 billion in revenues, and that's another $5 billion over 2019, when they generated almost $20 billion of streaming revenues alone. So if you take that differential of $5 billion more in each of the years 2020 and 2021, Netflix is trading at just about that differential price of $10 billion that it had generated 5 years ago. So it's incredible how much people seem to have questioned Netflix's ability to continue generating monster revenues. And although a lot of that was, of course, because we were all stuck at home, it's still incredible how much people have lost faith so quickly. While Netflix had lost 200K subscribers in the first quarter, and then in their April earnings call, they announced that they'd probably lose another 2 million subs in the second quarter. So they'd reached a max of about 222 million subs globally, and chances are that might be at 220 or less by the time this quarter ends. So we'll have to see on July 19, when they have their next earnings call, how much of a loss they really will sustain, and if that will cause investors to bail out of Netflix even more, because I certainly think that Netflix could be a compelling investment case as it is right now, but there's so many macroeconomic factors working against it, and if Netflix continues to report not so stellar news, then perhaps there could be some more downside to the stock. So who knows when it will bottom, but it's starting to be really interesting to me, because now they're having to find themselves to maybe undisrupt the way that they'd been disrupting the existing cable business, where if any of us had experienced watching normal cable TV, we were used to paying something like $80 per month on a bunch of channels that we hardly watched, and then we'd have to deal with watching commercials the third of the time. And Netflix for a long time had prided itself on not having any ads. So now that it's considering having ads to also bring in some more revenues, that's something that CEO Reed Hastings had been kind of resisting for a while. And then also to have to go after some non-paying viewers. These two main factors were what scared Pershing Square Holdings and Bill Ackman's decision to liquidate on April 20th, where they believe that they're not sure what impact these potential changes might have on the future long-term growth of subscribers in Netflix, and also future revenues and capital intensity and operating margins. So for some of those main reasons, they decided that it's not worth sitting in the stock, that if they held onto it, they'd be currently holding on to a 50% plus loss on one stock alone. So I'm assuming that Bill Ackman and team are not willing to wait for Netflix to turn around in the next few years. And who knows how long it will really take for Netflix to regain its stock price that it had hit at $701 per share. But it looks like a lot of people have become really bearish really fast on Netflix, and they're questioning where it's going to go from here, considering how a lot of its competitors have been quickly nipping at its heels with the rise of Amazon Prime Video and also Disney Plus, along with Hulu and ESPN, and also Apple TV Plus and HBO Max and Paramount Plus and others. So across all of these things that now are taking a chunk of the streaming attention span, a lot of people are wondering what is so special about Netflix anymore. So that's why people are saying that it has to undisrupt and kind of do some mainstream type things again that maybe are kind of what traditional cable TV providers did, like having programming that's maybe only aired once a week, and also doing some traditional media strategies that I'm not sure how good of strategies those are, but Netflix finds itself not being an underdog anymore. They're now the one to beat, and a lot of people seem to be more than happy to kind of pound on Netflix lately. So in spite of some of that negative press, I think that the future is probably pretty bright for Netflix. And of course, you should do your own due diligence and research, and not just take advice from any person online, and thoroughly look into if you think that this might be a compelling investment idea or not. And among some of the traditional media strategies that Netflix is reported to be considering is how they're developing TV shows. So they used to just go straight to series, where they would tell content creators to just make an 8-episode series. And then if a lot of people liked it based on the Netflix algos, then a lot of people might want to see another series come online, much like a lot of us enjoyed seeing Bridgerton season 2. And so that would help if Netflix had some hit series, and then more people would watch them. But then now they're thinking like in terms of maybe a traditional studio, where in those days you would raise money for a pilot and then test it. And then if it does well on that first pilot episode, then you might pick it up and then run a few more episodes and see how the ratings fare, until you might really sponsor many more episodes and seasons thereafter. And so now they're having to slow down after some aggressive growth years where they've been building their content library. But now that they've got tons of quantity, they're trying to emphasize more quality over quantity going forward. So it looks like they're probably going to be ordering more pilots before they just commit to straight to series. And after Reed Hastings vowed in 2018 to never follow a competitor, he tried resisting having Netflix copy what other traditional media or linear cable companies did, where they didn't do live news or live sports. So to date, Netflix hadn't bid on live sports, but now they're considering bidding on Formula One racing rights because of the success of their documentary series, Drive to Survive. And also they're considering going after password sharing, where even though Netflix has about 75 million subscribers across the US and Canada, potentially 10 million households are not paying for viewing Netflix. So that could equal another $2 billion of revenues that Netflix is missing out on. And globally, the amount of people not paying for Netflix but still watching it could be as high as almost 28 million. So that could be missing out on another $6 billion of revenues. So potentially Netflix could get more revenues that way. And then also some some have estimated that Netflix's potential revenues from ads could be as much as $7 billion by 2025 globally, and that would be 15% of projected revenues of $45 billion by 2025. So that could be a substantial amount if somehow Netflix is able to garner another $13 billion across ads and getting users to pay, and that might really help their bottom line and to reinstill some faith in the growth trajectory of Netflix to be able to see if they can continue growing on top of the 30 billion that they generated in 2021. And it's potentially possible that Netflix will not grow as much this year in 2022 if they're losing subs for now. But if they can figure out how to incorporate ads in a year or two, then maybe that will really give them a boost, even though they're currently losing some market share to some others like Disney Plus and those that already have for a long time incorporated ads, like I know Hulu has. So it seems like a lot of people don't mind having ads, and a lot of us don't really mind if we can put the mute button on it and not be subconsciously influenced to have to buy products. So with that in mind, if people are willing to have a lower subscription model, then more people might be willing to pay for Netflix in exchange for paying some of their attention toward ads. But maybe that's not such a bad outcome, considering a lot of us had for years suffered through traditional cable of seeing ads, even though we were paying crazy money in retrospect. So if you haven't cut the cord yet, I highly recommend you do, and also decide which streaming services you really need, because it's not all worth having like 5 or 10 subscription services. You really should limit your attention to only the few that you really like, because you could have some subscription fatigue and then you will kind of resent having these memberships, just like you would resent having a gym membership, feeling guilty that you're not taking advantage of it enough. And so don't do that to yourself, and only streamline your life to the few subscription services that you really need. And your life will be a lot more peaceful that way, especially since a lot of us can go outside now, so we're not stuck at home and don't really have to just be couch potatoes. And also, I'm not a customer of Netflix, but I feel pretty intrigued by Netflix as an investment model. So as much as I resist subscribing myself, I really do want to see Netflix succeed in the future and have more joy in giving content to people that people really like. And to elaborate on a couple of items I mentioned earlier is that there's speculation that Netflix might want to consider either buying or collaborating with Roku, which it had collaborated with in the past. And Roku is a hardware provider featuring streaming services on either an external device or embedded within smart TVs. And also they have a successful advertising business. So that's why some are suggesting that it would be a complementary asset to Netflix. And who knows whether Netflix has the capital or wherewithal to be able to buy it, because it seems a little bit doubtful since Netflix has $6 billion of cash and equivalents on its balance sheet, but something like $15 or $16 billion of debt, and they still need to focus on churning out quality content. So to me, it seems unlikely that Netflix would want to go for Roku, which has a market cap of almost $11 billion. And also they'd have to either raise financing and also maybe lay out more stock. And in the current macroeconomic environment where things seem to be getting more pessimistic, that doesn't seem very likely to me that Netflix would want to do even more of a debt raise than they currently have on their books. But who knows, anything is possible. And then also some are suggesting that it might want to consider partnering with Spotify in order to diversify some of its offerings, considering how Spotify is all about streaming audio. And even though it's kind of a nice idea, I don't know how it would work or what the financials might look like. So definitely keep that in mind as well. And I think that across all of these potential partnerships, the mainstream consensus seems to be that Netflix should figure out ways to diversify its existing business streams so that it can generate more revenue. But I think that ultimately, Reed Hastings and Ted Sarandos, the co-CEOs of Netflix, will figure out what is best for Netflix, since they have a way of innovating and doing things that are uniquely them, and they try not to follow the rest of the pack. So I kind of feel like it's not super likely that they'll buy Spotify or Roku, and they'll figure out some way. But a partnership certainly seems plausible to me if they can figure out a way that it's a win-win for both companies. And then also, I happen to to have looked at how many super investors are either buying or selling Netflix. And as of the first quarter, more super investors on Dataroma were bullish on Netflix at a ratio of twice as many buying than selling, at 6 buying and 3 selling. But then Bill Ackman turned around and ended up selling in Q2. So it looks as if we're starting to become a little bit bearish in the super investor sentiment of investing in Netflix. So I'm curious to see what their outcomes will be like in Q2, because to me that will be a really big test to see if these super investors find incredible value in Netflix now or not. So stay tuned for July, when more super investors will release what some of their investments might be, and they might not come out also till August. So we might have to wait up to 45 days to know what some of these super investors are invested in. But I feel pretty interested in seeing how many super investors believe in Netflix and think that it might be on sale right now. And so if you enjoyed this video or learned something, please like and subscribe, and let me know in the comments what you think about Netflix. I'd love to hear from you. Till next time.